Where does real value come from? What are we looking for when we hold something like XRP, XLM, Algorand? What are we waiting for? We see the price stagnant, right? But we're not paying attention to what this is going to be in the future, right? What is being built out right now? The hot word of 2023, tokenization of real world assets. We're talking about equities, stocks, bonds, futures, all of that money, derivatives, trillions, right? Trillions and trillions of dollars is going to be coming onto the blockchain. So these companies, these BlackRocks, Invescos, these Charles Schwabs can move that value at the speed of light for a fraction of the cost. That is the new future system. And right now we're going to talk about tokenization. I've got a lot of great clips, how XRP can really get to a high price. It's not going to come from me and you in retail buying in the speculation. That's not what it's about. It's about bringing real world value onto the ledger. Debt, right? There's trillions, hundreds of trillions of dollars in debt globally, hundreds of trillions of dollars in real estate globally that can get tokenized and brought on to ledgers. And that is really what we're waiting for. So let's go ahead and talk about tokenization today because it's very important. And this is why I own XRP. And I'm not going to sell certain XRP because I know that in the future, it has a strong chance of doing really well. Okay, let's play this. This is Larry.
I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. I believe the next
instantaneous settlement, right? They want to be able to track all of this stuff. They want to be able to keep it easy on a ledger, right? This person owns this, that value can move instantly. That's the goal here, and that's what's being built out right in front of our eyes. Let me go ahead and play this clip, 22 seconds.
Tokenization generally, I think, is getting kicked up into a whole new stage where you have these advanced tokens, real world asset tokens, that need to have data injected into them in order for them to come into existence and be valuable. So proof of reserves, price data, identity data, all this different type of data needs to be added to those tokens in order for them to become existing and usable.
All right, so Quincy Jones is going to tell you where real value could come from for a token like XRP. Let me play this.
So anybody out there that's telling you they know where the price of XRP will go has no idea. Absolutely zero clue. But I'll give you a tiny hint of an idea of what could happen. So XRP is it's a financial instrument of value, and that instrument is basically, the instrument's really liquidity between different other instruments like bonds, stocks, currencies, all everything basically. Yeah. And the XRP is only worth the value of the things that are issued on it because it would cost XRP to buy those things on the network and use that liquidity. Mm-hmm. So what ends up happening here is not only do you have to issue all of the equity, but you've also got to issue all of the debt. So XRP is only bound by the fiscal responsibility of the people that issue assets on it, which is obviously irresponsible. So XRP could be at $100, $100,000, $1 million. It depends on how many assets you want to issue onto the network. So if you wanted to issue $100 trillion worth of equity, cool, that's a lot of money on the network. What happens if they want to issue another $500 million worth of debt? That also adds value to the network. So there really is a mind-blowing amount of wealth, essentially, that could basically be flowing through these networks that we can't even comprehend because of that debt question of being able to issue more and more value in the form of...
Let me show you this, right? How much debt is in the world? Let's see, $305 trillion. This debt is going to end up on certain blockchains, right? And the reason I think it could be like an XRP or an XLM, you look at the Stellar's partnership with Franklin Templeton, and I'll talk a little bit about that here in a second. They've already issued $300 million, right? There's more real world assets on XLM right now than any other chain, believe it or not. So they're starting to bring this value here, right? And I personally think that holding XRP, XLM, Algorand, those are really going to be the key financial instruments here in the future, okay? Now, CBDCs are being built out and tested. A lot of them are using private ledgers to test that. Sooner or later, the private ledger and the public ledger are going to merge. That is here in the future. We're waiting for hooks, we're waiting for Evernote to be built out, and we're going to get there sooner or later. It's obviously not here just yet, but it's still being developed and worked out. And I think you need to look past what the price is today and look what the price might be in 5 to 10 years from now. So let me go ahead and play this.
So David, first, I know you have some feelings about phrases like money is already digital. And can you unpack for us what tokenization really is, why it's different? What does this unlock for us?
Sorry, let me just tell you, so this is Senior Managing Director of Accenture, also a Ripple partner. That's who she's talking to. I need to give you that context.
Tokenization do uniquely or differently?
Yeah, it is one. How many people face that question or have to still answer that question of like money is already digital? Yeah, so I see a number of hands. It's one of my least favorite phrases to hear or need to respond to. I don't mind the question because it limits the conversation, right? We live in an increasingly digital world, and when we put our human needs at the center of it, we need solutions to be able to help us bring our identity, money, and objects and assets with us from digital experience to experience. We can't do that today. Today, we are constrained to a username and password individual relationship with each service provider in our life. And lo and behold, identity, money, and objects, every business transaction, I would love to hear if somebody can think of one that doesn't, involves identity and money. Most of them also involve an asset or a service in the digital world. We are innovating against these tracks independently. I will go from here to another conference that's entirely focused on digital identity and verifiable credentials, and it's all based on the same underlying technology of a provably unique object in the digital world. And so we've had a huge focus at Accenture and with our partners over the past year in particular of bringing these innovation waves together to actually put the actual human, whether it's an individual human or groups of humans in a corporation, their needs together to say, look, I need to be able to bring my identity, money, and objects with me from experience to experience across firewalls to get the services and products that I need. I need universal wallet infrastructure to be able to hold that. In the physical world, I have a leather wallet that has a standard card size for things that fit in it. That wallet contains my car key, my building access, my financial credit worthiness on my Visa card. It's got my central bank liabilities in the form of physical cash. I'm the point of integration of all of the various services that I need, and yet I'm not enabled to have anything close to a great experience in the digital environment where I can traverse those experiences. And so when someone says money's already digital, it's limiting the conversation to realize that actually we need to focus on what, we have a digital world. If I pivot the question around, I think the better question is, in the digital world and experiences that we're existing, how could we better enable humans and groups of humans to work with the combination of identity, money, and objects? And lo and behold, the tokenization, that notion of a provably unique object applies as much to my college degree, my car title, my library card, and those will all be different systems. They'll, different architectural choices, and I need something to be that point of integration to then actually be able to innovate a whole new wave of products and services.
All right, I thought that was a really cool clip. So Zodia Markets, this is CEO of Zodia Markets. Medico is a partnership, Zodia with Standard Chartered. Let me go ahead and play this for you real quick.
Biggest market in the world, and we think that'll continue to evolve. Regulation is one thing, but actually we've got potentially the spot Bitcoin ETF. Now everyone's very excited about that in the digital asset ecosystem. So the spot Bitcoin ETF with market participants like BlackRock and Franklin Templeton putting the applications in, we think that's a significant opportunity. But also we've seen a market segment we weren't necessarily expecting starting to get more interested in actually the utilization of cross-border movement funds, because digital assets have no border. Right. So it allows for much more efficient movement of value and transfer of value. And interestingly, in an interest rate environment that's increasing, we've actually seen even more of an adoption, more of an urgency, because I think corporate clients are realizing that they need to move faster than the traditional banking system allows them to.
So without borders, we really need that global cooperation when it comes to a regulatory framework.
We do, and there's been some consultations through IOSCO. There's been kind of regulators in significant jurisdictions making strides, which is hugely valuable. But we do need cross-border cooperation, because without borders, it means that you can transact at the speed of the internet. And the challenge at the moment tends to be the banking system slows everything down.
And they want to keep it like that, right? Banks make all kinds of fees whenever you're trying to move money, and it takes so much time. Imagine a world where everything just moves instantly and it's cheap, it's efficient, it's easy for you. And that's where I think this is all going. Blockchain adoption among the big boys like BlackRock, JP Morgan's is happening beyond search engine headlines. Blockchain is happening under the fold of financial system outside of the public view and the media, right? You don't hear anything about really blockchain. It's all about Bitcoin, but you don't really hear about tokenization and where this is all going. And you have to be a part of a community. You have to watch videos like this to really understand where this is all going. Let me play this.
See in that space in particular over the next year?
As you mentioned, it's also yield-bearing stablecoins. Stablecoins has a wider definition, which also is a problem because we need to narrow that definition for people to really create standards and grow. But money market funds that are tokenized, we've seen that already come to fruition in two different places. First, Franklin Templeton, they created this, we call it Benji app, where they tokenized a money market fund. And interestingly, because it was tokenized in such an easy to use interface, that particular money market fund actually within the first month doubled their assets because everyone was using it because it's so easy to use and there's an interest in getting more yield at the same time. JP Morgan working with BlackRock, they've also tokenized a money market fund. So that's a perfect example of like adoption, product market fit, and unfortunately it goes below the fold in terms of the search engine headlines because everyone's so focused on just hardcore crypto stuff, whereas the call it boys are actually adopting the blockchain technologies below the fold.
The big boys are adopting blockchain technology below the fold. I love it. I don't really need to play that one. This is what I want to play. Jenny Johnson, president of CEO of Franklin Templeton, touching on a huge opportunity, blockchains from infrastructure standpoint. Check this out.
Turning back, Jenny, to you around the use of tokenization, blockchain. You've been using that quite a bit. And how do you see that affecting the asset management industry?
First of all, I couldn't agree more with Jane on 2 points. One is, that's a first. One is that from an infrastructure standpoint, huge opportunity. And I think we all recognize that over time, as these various projects come together, there's going to be great cost efficiencies in the system. And two, the work that's done with HKMA and in Hong Kong here on the regulatory front, we're following it all over the world. And you've been real leaders because you've been willing to come out with very clear guidance on that. So that's great. So Franklin Templeton got involved in blockchain. Early on, the first thing we did was decide we wanted to do a tokenized money market fund. And so we built a shareholder servicing system on chain, and then we actually worked with the SEC, so it's an approved regulated money market fund. And in that process, we saw a couple things, as well as a hot cold storage wallet. So it gave us some good insights into how a cost, because we ran 4 of our own transfer agency systems historically, and we were astonished even ourselves to figure out how much less expensive it was to run it on chain. And then 2, we ended up, you had to hold coins because you need to be able to pay for the transaction. So this is a public chain money market system. So transactions are on a public chain. Obviously, the shareholders' information is on our private chain. And so as we then started to hold, we did on the Stellar Network, Lumens, we started to recognize, wow, if you hold these, it's interesting as a node validated, you're learning a lot of information about what's going on. So today, we actually validate 5 different chains. And for those who completely think about dismissing this, I just want to say that the Ethereum network, if it were a public company, hit 10 billion in revenue at about the same pace as Google and Facebook hit 10 billion in revenue, faster than Microsoft, Workday, and Salesforce. So whether you can get comfortable with the Ethereum coin as revenue, there's something very real here. And so as we looked at that, we then built kind of active management strategies around that. So we actually have a team. If you read the write-ups that our team will do, I think there's 30 coins that we feel very comfortable with. It would be as detailed, as a matter of fact, they came out of our fixed income group. It would be as detailed as any write-up that we have anywhere in our equity or fixed income world. And then what gets us really excited is that what Jane was talking about is just the efficiency of this. So if you think about blockchain, it does 3 things. So number 1, it has a smart contract. So it's the ability to just execute a contract without anybody getting involved, no title company to prove the ownership or anything. Number 2, it has a payment mechanism. And number 3, because it's a general ledger, you don't have to validate that the rights of whoever owns it has all the rights to the contract, right? So it takes a lot of the friction out of transactions. And if you can do that, you can actually fractionalize transactions more. So my favorite example to bring this home is Rihanna, the singer, who came up and issued 300 NFTs, each one with the right to 0.00033% royalty of one of her biggest songs. Why can she do that? Because when the streaming service plays her song, the smart contract can kick off, and those fractions of pennies or fractions of whatever the payment is comes in and then comes right into whoever owns that in the wallet. So you can imagine that there are going to be the ability, blockchain's going to unlock uncorrelated, untraditional types of investment capabilities that people, and you're already seeing it, I won't spend any more time, but you're already starting to see those, that will be uncorrelated to the rest of your portfolio, which as an asset manager is really interesting.
There are use cases that we're just now making up or experiencing, right? And that is the fun of crypto, because we're watching all of this happen. And if you're here, if you're watching this, it's not like 10 years from now and it's a snooze fest, you're part of this, right? And if you're not excited about where this is going, you should reevaluate what you're trying to do here, right? What is your end goal here in crypto? Are you here to make a quick buck? Or are you here to invest in assets that are really going to take hold and reshape the way our planet moves value? That is why I own some of these assets, and that is why you should learn about this and you should be up to date, because it's just, man, it's just exciting. All right, I'm gonna leave it there. Appreciate you watching the video. If you like the video, please thumbs up, leave a comment. Appreciate you. Let's talk down in the comments. I'll see you next time. I've been Crypto Sensei. Aloha. Bye.